What's going on, guys? Welcome back to the channel. My name is Anfernee, and in this video I want to talk about your best investment options that you have available to you in your late teens and early 20s in 2022. When I was just getting started investing, I had no idea of the sheer amount of opportunities that were available to me, and it was a lot of trial and error trying to figure out what method or what investment strategy really worked for me. So in this video, my plan is to lay all of that out for you, give you a good idea of what investment options I have pursued myself and what has worked out for me, and what I wouldn't necessarily consider a good idea if you're in that late teen and early 20 range. So if you think you're going to find any kind of value in this video, then don't be afraid to tap that like button for your boy, as it really does help the channel out and allows it to reach a little bit of a larger audience. And the very first investment option that I want to discuss in this video is going to be investments in individual stocks. The reason why I want to discuss this investment option first is that it seems to be the most popular for people who are just beginning investing and people who just want to get their foot in the door and actually making some money on the money that they earn. The reason why investing in individual stocks is so popular is, one, many gurus claim to be able to teach how to buy low and sell high in the stock market, and two, it has one of the lowest barriers to entry of any investment option that I'm going to talk about in this video. You can pretty much start investing in individual stocks with as little as $1. However, there are some things I want to warn you about before you just start opening up brokerage accounts and putting all of your money into them. Now, I am going to talk about another investment option besides individual stocks later in this video, but for right now I want to warn you that individual stocks tend to require a lot more research and market knowledge than some of the other investment options out there. What I mean by this is that if you want to begin investing in individual stocks, you may want to learn up on how to read a balance sheet, how to determine how wide an industry moat is, learn what the rows in an income statement mean. All of these things are very important to knowing the financial health of a company, and if you're trying to put your hard-earned money into one single company or a group of single companies, then you really want to know what you're investing in and how they are going to make money and continue to make you money for months or years in the future. Individual stocks used to be my favorite investing strategy. I used to put all of my money in AT&T and Tesla and Apple and Microsoft until I found a different investment option that allowed me to do all of that all at once without me having to worry about if one particular company had bad earnings. And overall, my opinion on individual stocks is that yes, it is cool to dabble in it every now and then, but unless you are a hardened veteran and reading balance sheets like the Warren Buffetts of the world, then maybe you should stay away from individual stocks and then move a little bit more towards some of these other investment options that I'm going to talk about. But now let's move on to one of my favorite investing strategies, and one that I continue with about 95% of my investment capital today, and that is investments toward index funds. Index funds are very similar to investing in individual stocks because you're investing in the stock market and exposing yourself to stock market risk. However, the big difference between index funds and individual stocks is that index funds don't require that same level of research that you have to put into individual stocks. With an index fund, you don't necessarily have to deep dive into what you think is going to be the best performer, because with an index fund, you're going to be investing in overall markets. What I mean by this is that instead of trying to invest in Tesla or Coca-Cola or Apple and trying to decide which one of those big companies will do better than the other, what you can do is invest in all of those companies all at once just by buying a single index fund. And with this particular investing strategy, you are exposing yourself to less risk while also benefiting from the overall market as it goes up over time. I like this sort of investing strategy because it's like the perfect storm if you're trying to invest for retirement that's 20 or 30 years away. The downside with index fund investing that a lot of people bring up is that you may not benefit from an extraordinary high return if one particular company goes up. And what I would have to say to that is that if you're trying to pick that one home run company, or if you're trying to get that one investment that'll make you a millionaire, then you may be better off starting your own company or even playing the lottery in that sense. Because if you're just trying to ride the coattails of another company and hopefully making $1,000,000%, the chances of that happening are not all that likely. So in all of my other videos, when I'm being extremely transparent about my investing strategy, or if I'm just showing you what's inside of my portfolio, 9 times out of 10, if you're looking at my Fidelity portfolio, it will be 100% index funds. But I do dabble a little bit into individual stocks in some of my smaller portfolios, like the ones I have with M1 Finance and the one I have with Public as well. But now let's move on to another investment option that I'm really excited to start getting into as of the year 2022 and moving more heavily into 2023, and that investment option is going to be real estate investments. Now, real estate investments come in a ton of forms, and I am by no means an expert on this topic, but the real estate investment strategy that I think has a low barrier to entry but offers excellent investment returns when measured against rent would be rental property investing. Now, for someone who's been following the channel for a while, you guys know that I've been debating getting my first rental property for about a year now, but I'm happy to say that within the next 12 months I will be looking to get my first rental property and sharing that experience here on the channel. And for those that don't know, rental property investing is going to be where you buy a house that you don't plan on living in with the intention of renting that property out to another person, so that that person's rent that they pay to you would then cover the mortgage that you have on the house and any other expenses that may come up. The great part about rental property investing is that you are essentially getting paid in 4 ways. The number one way is rental revenue, and with that rental revenue, you're going to be paying down the mortgage that you have on the property, while at the same time, if you bought the property low enough, giving you a little bit of cash flow on top of that number. So your rental revenue covers 2 income categories: principal pay down and cash flow that exceeds your monthly expenses. You also get paid in rental properties in the form of tax advantages, meaning that you can depreciate a portion of that home against your taxes and have to pay a little bit less money to Uncle Sam on a year-to-year basis. If you want a full video on how depreciation works, then leave a comment down below and I'll be sure to get that uploaded for you. However, the 4th way that you can get paid from rental property investing is in the form of capital appreciation, and that is just when the value of the house that you buy goes up over time as you continue to hold that property. And those 4 awesome ways to make money are the reasons why I want to get my foot in the door to rental property investing, but that's not the only way that you can get started rental property investing. Another easy way to get started rental property investing is by buying REITs, and that's basically sort of an index fund / individual stock way that you can get started real estate investing with as little as $1, like many other stock market investment options. I think real estate has a lot of advantages, and I'm really excited to document my journey into becoming a real estate investor here on the channel. So if you're excited to see that or see how that works, then hit that subscribe button, because more videos will be coming up about the topic sometime in the near future. And then if we move on to the hot topic right now, what is probably the number 1 Google search investment strategy as of 2022, and that is going to be investing in cryptocurrencies. Now, I have nothing against cryptocurrencies at all. However, it is proven to be much more volatile than some of these other investment options. But if you have a higher risk tolerance and you're able to withstand some of the down markets in cryptocurrency, then taking advantage of this new technology may absolutely pay off in your favor sometime in the near future, or even in 20 or 30 years from now. When you come across crypto investors, there are typically 2 categories that they fall in. One of the categories is that they're just trying to take advantage of the get rich quick style of investing, meaning that they're trying to buy low value coins and selling them once they gain a few million percentage. However, in the second category, and this is the category that I fall in myself, are those investors who buy cryptocurrency with no intention on selling them, and then they plan on using that currency as an actual trade of value sometime in the future. So for example, people do this a lot with Bitcoin. Instead of buying and selling Bitcoin, these crypto investors will buy as much Bitcoin as possible and then wait for the day that it is accepted as an official trade of value. So instead of using a US dollar, you can use a piece of Bitcoin, for example, and then that's when you'll reap the benefits from your cryptocurrency investment. So depending on what style of crypto investor you want to be, there are risks for both sides. As in, if you want to be a get rich quick style of crypto investor, then the crypto coin that you may choose may not actually go up the way that you want it to. Or if you're a long-term crypto holder, there's no promise that they'll actually be used as a trade of value anytime that you're on this earth. So you just have to take those 2 factors if you want to decide to start investing in crypto. Me personally, I do think that there will be a day where cryptocurrency in general, not saying it is Bitcoin or Ethereum or any of those ones out there today, will have an official store of value with most governments. However, as of right now, it is uncertain of when that day would be. So honestly, it's like taking an uninsured bet that it may happen or that it potentially may not. Just sort of have to roll the dice on that one. But I don't see why not, if you can afford it, that you can't put a couple dollars in there just to see if it may work out for you. And one of the last investment options that I want to talk about in this video is going to be investing in short-term money. And honestly, this probably should have been the first investment option that I talked about, because short-term money is vital in making sure you have financial security when you're getting started on any of these investment paths. And basically what short-term money investment is not really an investment at all. It's going to be putting money into a readily accessible savings account or a money market account that you can have those funds on short notice or on demand if an emergency comes up. I have been in a situation before where I have all of my money tied up in assets, and if an emergency did occur, I would not have enough capital on hand to cover that emergency, and it would leave me in a bad situation because I didn't have the cash to cover my needs. So when you're just getting started investing in any particular category, you want to make sure you have at least $1,000 in a savings account. And if you want to be even more secure, you want to make sure you have at least 3 to 6 months in a savings account. This insulates you just in case you lose your job. This insulates you just in case you get into a car wreck and you need to cover a high deductible, or you need to pay any medical expenses out of pocket. And also having enough cash on hand would allow you to sleep a little bit better at night, because you will be able to know that even if your investments went down in value, that you don't have to rely on the value of that in the short run, and you will be able to cover any immediate needs from the cash that you have in your savings or in your your checking account. If you put every single dollar in investing, you're gonna stress yourself out and overall not enjoy investing, when investing should be a very enjoyable task to you. You should like the ups of investing as well as like the downs, because it goes up and down over time. And if you're scared of losing money, then you may be better off leaving it in a checking account, but even then you'll be losing money due to inflation. So my key here is have enough cash to get you through emergencies, have enough cash to cover any emergency room visits, have enough cash to make sure that you're financially secure, and then start pursuing these other investment strategies. But with all that being said, I really hope you found value in this video. If you did find value in this video, then don't be afraid to tap that like button for your boy, as it really does help the channel out. And if you want to make a little bit of free money, then head down into the description below, where if you use the public link and sign up to the public app, you will get a free stock value anywhere from $300 to $300 just for signing up and opening the app, and allow that to be a little treat from me to you as a thank you for watching all the way to the end of this video. But as I said, I really hope you did find value in this video, and I'll see you in the next one, guys.